Hello, and welcome back to the Frugal Hacking channel, where we break down the complex systems that control your finances. I'm the Frugal Hacker, and today we're tackling a financial black box that impacts every single one of us. The looming financial crisis, the ACA's 2026 cliff. I'm a cost optimizer. I track every dollar. But for years, one line item, health insurance, has felt like a runaway expense. Right now, millions of Americans are facing a massive financial wake-up call. The enhanced subsidies that have made Affordable Care Act, or ACA, plans affordable for millions are set to expire at the end of 2025. When those subsidies vanish, the sticker shock will ripple across the country, hitting everyone from young families to pre-retirees. This isn't just a policy debate in Washington, it's a kitchen table financial crisis in the making. As frugal hackers, we believe you can't make smart decisions about your money or well-being without first understanding the system you operate in. That's why it's critical to get under the hood of Obamacare right now. My goal today is to give you a comprehensive, no-nonsense financial analysis of the ACA. We're going to bypass the political noise and focus on the numbers, the mechanics, and the real-world outcomes. We'll cover what the ACA is today, assess its successes and costly failures, diagnose the deep cracks in the system, and analyze the high-stakes gamble of the 2026 subsidy cliff. Let's get started. Part 1. The ACA Today, a Frugal Hacker's Primer. Before we can talk about fixing, replacing, or surviving the system, we have to understand how the machine is supposed to work. What is Obamacare really? The Patient Protection and Affordable Care Act, passed in 2010, fundamentally reformed the U.S. health insurance system. Its primary goal was to expand coverage through two main mechanisms. 1. Medicaid expansion. It expanded eligibility for Medicaid to nearly all adults with household incomes up to 138% of the federal poverty level. 2. Health insurance marketplaces. It created regulated exchanges like healthcare.gov where individuals can buy private insurance plans. These plans are grouped into metal tiers, bronze, silver, gold, and platinum, based on the percentage of costs they cover. The law's main tool for affordability is the Premium Tax Credit, PTC. These are income-based subsidies that lower your monthly premium. Also, there are cost-sharing reductions, CSRs, which are extra savings that lower your out-of-pocket costs like deductibles and co-payments, but only if you enroll in a silver plan. The ACA also introduced vital consumer protections we now take for granted, like banning insurers from denying coverage or charging more for pre-existing conditions, and allowing dependents to stay on a parent's plan until age 26. The original crisis it solved. To judge the ACA fairly, we must remember the mess before 2010. The law was designed to fix interlocking crises. 1. The uninsured crisis. The national uninsured rate was a staggering 16%. Lacking insurance was a leading cause of personal bankruptcy. 2. Prohibitive costs. Even with insurance, high deductibles meant millions were underinsured, technically covered, but still facing medical bills they couldn't pay. 3. Exclusion for pre-existing conditions. This was arguably the cruelest part of the old system, trapping people in jobs they hated just to keep their insurance. The modern-day scorecard. More than a decade later, how has the ACA performed? A frugal analysis demands a clear-eyed look at the data. Successes. Pros. Massive coverage expansion. The uninsured rate has plummeted from 16% to a record low of 7.7%. Vital consumer protections. Banning pre-existing condition discrimination is now a foundational principle. Financial assistance for millions. In 2025, over 93% of marketplace enrollees received financial help. Failures, cons. The underinsurance crisis. High deductibles, averaging over $5,000 for silver plans, mean the insurance is often unusable for anything short of a catastrophe. Persistently high administrative costs. Administrative costs in the private market average 17% of premiums. This is a massive leak compared to just 2% for traditional Medicare. Limited competition and narrow networks. Lack of competition in many regions keeps premiums high, and many plans restrict patient choice by including a low number of doctors. Part 2. The cracks in the system. From a frugal perspective, a system's true worth is measured not just by who it helps, but by who it fails and at what cost. The outsiders. Who is excluded? The ACA has left gaping holes, creating distinct groups of winners and losers. 1. The Medicaid coverage gap. In the 10 states that refuse to expand Medicaid, an estimated 1.4 million people are in a cruel paradox. Their incomes are too high for traditional Medicaid, but too low to qualify for the ACA marketplace subsidies. A single person in Texas earning $10,000 a year qualifies for nothing. 2. The unsubsidized. Before the recent enhancements, millions of people earned just enough to be disqualified from receiving any financial help, leaving them to face crippling premium costs. 3. The family glitch. A frustrating financial trap where a worker's self-only coverage is deemed affordable, locking the entire family out of subsidies even if adding the spouse and children costs thousands more per month. The premium puzzle. Why your bill keeps going up. For those who do get coverage, the annual premium notices are often shocking. The price increases are driven by several core flaws. 1. High provider and pharmaceutical prices. This is the single biggest driver. The ACA subsidizes the purchase of private insurance, but it does little to control what hospitals, doctors, and drug companies can charge. Private insurers pay significantly more for the same services than Medicare does, and that difference is baked directly into your premium. 2. Lack of insurer competition. Where there is a monopoly or duopoly, insurers can charge higher prices with impunity. 3. The risk pool effect. When premiums get too high, healthier individuals drop coverage first. This leaves a sicker, more expensive risk pool, forcing insurers to raise premiums even higher, creating a vicious cycle. Part 3. The 2026 Cliff. Financial Fallout. We've arrived at the single most significant short-term threat, the impending expiration of the enhanced premium tax credits. Analyzing the impact of the enhanced subsidies. These enhanced subsidies, extended through 2025, did two critical things. 1. They temporarily eliminated the 400% FPL subsidy cliff, making financial help available to higher earners. 2. They became more generous for everyone, allowing many low-income households to get a benchmark plan for a zero premium. The effect was dramatic. Subsidized enrollment surged by 137% since 2020. What happens if the subsidies expire? If Congress fails to renew these enhancements, millions will face staggering premium increases overnight. Low-income households. The $0 plans will vanish. A family of 4 earning $45,000 will see their annual premium for a benchmark plan jump from 0 to over $1,600. Older adults. A 60-year-old couple earning just over the old cutoff, about $85,000, could see their annual premium skyrocket to over $22,600, roughly a quarter of their pre-tax income. Middle-income families. A family of 4 earning $130,000 could suddenly lose all assistance and face an annual premium increase of over $12,000. The Congressional Budget Office estimates that 4.2 million more people will become uninsured if the enhancements expire. For over 20 million people, the financial stability of their household is hanging on a temporary political deal. Part 4. Diagnosis and Prescription. The ACA was a monumental effort, but from a Frugal Hacker's perspective, a system plagued by high administrative costs, significant coverage gaps, and a precarious financing structure is not a viable long-term solution. Diagnosis: why the system remains broken. The core failures can be distilled into 3 points. 1. It fails to control costs. It simply layers subsidies on top of the most expensive and inefficient private system in the world. It didn't change the underlying price of care. 2. It creates tiers of coverage. It has a clear hierarchy: the generously subsidized, the underinsured with crippling deductibles, and the completely excluded. 3. It is fiscally and politically unstable. The looming 2026 cliff is not a bug. It's a feature of a system built on a precarious foundation. The toolkit: concrete fixes. We don't need a complete teardown for every fix. Here are 2 concrete repairs to strengthen the current system. 1. State-based reinsurance programs. This works. It uses state and federal funds to reimburse insurers for a portion of their highest-cost claims. By removing the risk of catastrophic cases from the general pool, these programs directly lower premiums for everyone. 2. Capping provider payment rates. This is the direct assault on the core problem: high costs. This would involve regulating the rates private insurers can pay providers, perhaps capping them at a set multiple of Medicare rates. This could generate the largest system-wide savings of any incremental reform. A subsidy is a painkiller. A cost control is a cure. Proposals for a radical overhaul. On the drawing board, there are more transformative ideas. A public option. This would create a government-run plan to compete with private insurers on the marketplaces, using government-set provider rates to drive down costs. One study found it could reduce the median premium by 28%. Single-payer, Medicare for all. This is the most transformative proposal. It would replace all private insurance with a single public entity. This directly targets the 17% administrative overhead in the private market, a figure that dwarfs Medicare's 2%, and gives the government the power to negotiate lower drug prices. A systematic review found that 19 out of 22 economic models predicted net savings under a single-payer system. Final thoughts. The ACA was a monumental effort that brought coverage to tens of millions of people. But in solving a crisis of coverage, it failed to solve the underlying crisis of cost. It propped up a broken system with subsidies, and that foundation is now cracking under political and fiscal pressure. As we head toward the 2026 cliff, the need for smart, fiscally sound reforms has never been more urgent. Whether we choose to repair, regulate, or replace the current system, one thing is clear: standing still is no longer an option. If you found this breakdown valuable, please hit that like button. And if you want to keep receiving honest, data-driven financial analysis on the systems that impact your money, make sure you subscribe to the Frugal Hacking channel. What do you think is the best fix for the ACA? Let me know in the comments below.